I'm talking about the infamous, notorious, always good, best in class, everyone wants to beat it, S&P 500. In this video, we're going to talk about the three main reasons why the S&P 500 is virtually indestructible, especially if you're new to investing, especially if you want to have a hands-off style in investment. Something dependable, something robust. Now, I need to lay some ground rules. If you're new to investing, this might be new to you, but the economy and therefore the stock market is cyclical. It has ups and downs, swings high up, and when it goes way too high, it causes a panic eventually because it's unsustainable, right? Everything's overvalued, also known as a bubble. It falls down. Depending on how big the bubble is, it drops either a little bit or significantly into depression, right? So that is the cycle. It always happens. That's what happens in a free market where people take advantage of certain economic uniqueness during that time period. That drives a lot of value. People see that value, start investing in that value. It bumps it up super, super high. Then once it becomes unsustainable, it drops up and down, up and down. So .com is one of them. Real estate is one of them, etc., etc. You can see these trends over and over again. The new one might be actually driven by the international real estate market, but we'll see what actually happens. Now, coming full circle, as long as we as humanity grow together, moves up, then a stock or a unit of stocks like SPY will always go up. The reason is because SPY is made up of a set of stocks with very strict criteria. In other words, you have to meet these criteria to be part of this group. If you're not, you'll be eliminated out of this group. So it's like self-curated. And so if you look at the trend when the S&P even started to now, throughout all the cycles of ups and downs, the downs will always eventually happen, but it always come back up. And the S&P is a very robust way of reflecting this fact. So that's the first pro. If you're looking for almost a guarantee between a, let's say, 5 to 12% growth over, let's say, a 5 to 10 year growth period, which time flies, guys. If you're young, you might not feel like this, but once you hit 30, oh my God, every year just blows past you. Anyway, so if you're looking for a stock that is almost guaranteed to generate you value, you can almost look at it as a place to put rainy day funds. I will still always put money in cash, by the way, but if you're looking for some that's a little bit better than cash, put it into an S&P 500. In my opinion, there's no better, safer investment with such high returns. The second pro I briefly touched on, it is the fact that it is self-curating. So when you, as an active investor, you look at companies, you see, during this time frame, what might do well in this economic structure, or when COVID shuts down, what type of stocks do well? When there's an infrastructure bill, what type of stocks or group of stocks do well? Now, I'm not saying that S&P 500 would capture all of the ongoing trends and make sure that you are part of those investments. What I am saying is that once a stock is proven based on its criteria, like Tesla, for example, is made into S&P 500, so you don't have to take on the risk of investing in Tesla itself. You don't have to figure out, how much should I invest in it to have proper bankroll management. The S&P essentially takes care of that for you. It has businesses in various sectors distributed in a way where, frankly, I think it's better than mutual funds. Over time, some stocks don't have that quality anymore and it gets removed. And from time to time, that does happen. Some stocks get eliminated from the S&P 500. The last pro I want to point out is that, I do have some investor friends who are professionals, and they will point out to me that, more often than not, their gold standard is, can they beat the S&P 500? If you cannot, then you really don't need to exist as a banker, as a professional. And similarly, if that is the standard, you're basically saying, let's say BMW is the standard of nice luxury sports cars. that means that it's a benchmark, right? It's already that good to become a benchmark. Therefore, you as an investor, a new investor, or someone who's looking for a secure investment to play your bankroll, again, reminder, you should always have cash in your rainy day funds just in case. The S&P 500 is the standard. I also want to give you an example that, if you are looking to invest and you're not sure, I highly recommend that you play some fantasy stocks or just monitor the market and measure the percentage in gains and losses and see if you can in fact beat the S&P 500 and how much time are you putting in to do that. Based on that outcome, ask yourself, is that worth your time? Do you actually have a passion in finding gems of investment opportunities? Does it take too much of your time to do even if you're good at it? Based on that output, you can figure out how active you want to be as an investor and figure out perhaps putting a percentage of your bankroll into S&P, and then the rest you can kind of tinker with, right? If you're more active or more passionate about investing or finding gemstones, needles in a haystack, then less in S&P and more in active investments. Because ultimately, if you talk to a lot of bankers, they'll tell you you don't want to invest more than 4 or 5 stocks at a time because you're basically pooling your capital into some key investments. If you're too spread out, you're too diversified, and you're basically like a mutual fund at that point. And mutual funds have very, very low returns on average over a long term. Those are the pros I want to point out. There frankly is no con. The only point I want to emphasize is that the economy is cyclical, so there will be downtimes, right? But over so many years, you will see that S&P will always come back up. And its gains during up times in history is very, very enticing. To the point where you should really ask your question, is what I'm doing right now, is it worth the risk? Because SPY is the most diversified growth opportunity I know of. I would invest in SPY over the ARK funds any day. All right, everyone. Thanks for watching. I hope you liked this video. If you have any questions or concerns, please leave me a note. And I look forward to working with you next time. Thank you.